Well, welcome everyone. We're excited to finally be in New York. It's been a long-awaited wait for us. So what I'd like to do really is just, I have a PowerPoint presentation I'll share, and we'll just kind of walk through just, some of the benefits and such, and then I'll open it up to questions. My name, of course, is Devin Cosgrave. I'm a loan officer here at Keller Mortgage. Just to give you a little background about myself, I've been a loan officer for just about 18 years. Came over to Keller Mortgage last year. That's a little bit about my professional background. I'm here in Columbus, Ohio, which is where our headquarters are. So same time zone as you. So we'll be on the same schedule and all that good stuff. So let me go ahead and share my screen here so we can get this moving. Bear with me a moment. All right, can everyone see that? All right, wonderful. So just gonna get started here. All right, so what kind of sets us off a little differently than most of the lenders that you probably work with now is, of course, the exclusive relationship we have with you as Keller Williams agents. We have a program that we call the 0+ program, and I'll explain that what that means as we go along. But you're able to use that for a home purchase, refinance. Whether you're the listing agent and have a client that would want to use us, or the buyer's client that would like to use us, or you're the buying agent and have your client. So these are the types of programs that we offer, just to get that started. So I have a pretty wide suite of products. Of course, all the different types of residential properties, single family, to 1 to 4 units, anything like any other, residential lender. Conventional VA, USDA, we jumbo loans up to 3 million. We work with a few different investors, Chase being one of those that, as far as just on the back end, who their loan would end up being with. Of course, conventional and FHA. A little bit. A little too far. So the 0+ offer. So typically when we originate a loan, our lender cost consists of $1,500. We have an origination fee and an underwriting fee. When you refer your client over as a KW agent, we waive those fees. We'll have $1,000 credit additional towards third-party costs if the loan amount is $150,000 or larger. And then also our rate would also be discounted. We have a 0.5 point off of our standard rate. So, you figure on a $250,000 loan, that's $3,750 in savings that they would normally be paying out of their pocket. So that resonates well with clients up front, I find, because again, that's money that they would normally be paying out of their pocket that they're able to save. So if you have someone putting, a 3% or, a low down payment down, that can help make or break a deal a lot of times compared to some of the other lenders that are out there. So like I said, it's a pretty strong selling point when you're talking to your clients and able to refer someone to us and say, hey, I can save you $2,500 right off the bat. So just a little bit about us. We do have a wide range of loan officers here that most of us are in the Scotsman Guide, and a lot of experience. So most anyone that you're ever going to work with here has multiple years of experience with being a loan officer. So talked about the thousands that you can save. We do not miss closing dates. That's something that when partnering with Keller Williams, that's one of our main points that we make sure that we're not not missing dates and being a reason that you're not, closing your deals on time. So, and then our technology, just our process, everything that we start is through a portal, like, a lot of lenders out there. So you can go on, well, first I'll back up. We like to connect with agents with loan officers. So you can go into the portal, you can connect with me as your loan officer. And anytime that you're going to send a client over to us, you can go right onto the portal, send a link out, and you'll know that once you're linked up with a loan officer here, that it's going to them. So you have one person to communicate with. And as they start the process, they'll enter in their basic information. Once they've completed it, we're notified. We'll organize everything. We reach out and get things started with them. One of the things that we also do up front is we do a full pre-approval up front. So when they start, they'll get a checklist of documents that we'll need from them. They'll upload those, and we immediately send those to our underwriting team. And usually within 24 hours, we'll have a full underwriting approval, a pre-approval, I should say. That'll read on the letter, and again, usually strengthens an offer when we're having multiple offers on a home. A lot of times that's going to put them on the top of the pile. So, and then again, good customer service. Again, being affiliated with Keller, Keller Williams, we do make sure that clients come first, and that, again, not missing closing dates and things of that nature. So. And again, just talking with the value of the agents, again, when you're able to tell somebody that you can save $2,500 right off the start, they're usually listening. So we kind of covered some of that stuff here with just the Zero Plus. There's a lot of marketing material on the portal for you. So, and I have a flyer that I can email out to everybody that kind of explains everything that we'll go over, that I can do so at the end. But have some marketing material that explains the Zero Plus that you can use. We order our appraisals day one, so we do not collect anything from the client up front either. So, when that gets ordered, we order it. If something goes wrong with the appraisal process, where it comes in low and the borrower just decides not to move forward with the property, they're not charged that appraisal. We just consider it a cost of doing business. Again, the commission protection that you see there, that's more or less, the $2,500 credit that they're getting just kind of protects to where you're getting, not necessarily having to give up your commission to make deals work, because again, they're paying such low fees to get everything done here. Then I touched on the pre-approval process, again, upfront, full free underwriting review, which a lot of lenders won't do that. They'll just send a pre-qualification, which this does get a lot of the kinks out up front. So once we get into process, it runs very smoothly. So experience. So again, I kind of touched on this. You can refer a client over through the portal. Obviously you can reach out to the loan officer first. A lot of times clients will want to talk before they submit all their information. So you'll have all of your loan officer, my information at your fingertips, that they could reach out, or you could reach out before to make sure, if there's a special circumstance or something like that, that they're covered before they're entering in their life story here to us to get started. Usually that upfront process, it does take about 7 to 10 minutes. So they're not spending a whole lot of time putting your information in, and then again, they'll get their checklist of documents. There are reporting tools. So you're notified through the portal when someone applies, when we've started, as we get into the process, when we order an appraisal, you'll be notified when the appraisal is scheduled, when it's complete, and then the client does receive a copy of the appraisal immediately once we receive it. I touched on the marketing materials that are available to you for customizing and such. We do a lot of social media ads and such, through just Keller Mortgage in general. So it gets the word out. And it touches a little bit on scripts, just with, again, just more of the resources there at your fingertips that we have for all to use. So there's just some, again, the portal, just the link for the portal.kellermortgage.com. We do have, we're big presence on Facebook. You can search for Keller Mortgage Mastermind and you'll find us there, and a blog that we have on our website. So again, really interactive. This is a process where if you have someone that's not so tech savvy, that would probably be a reason to have them reach out to us first. It's an easy process, but some folks just don't like the I guess the new age way of doing things. So we're always available for a phone call. So don't feel like they have to be a tech wizard to get through the process either. So marketing, here's some support that we have. You can always reach out for marketing materials if you have questions at marketing@kellermortgage.com. We have a full support team that's always available. So if you have a process, a loan in process or a question, and I'm out of the office or at the end of the day, you have someone to reach out to either by phone or by email. So we're always trying to stay connected. So that's kind of the process in a nutshell. So I guess I'll open it up for questions and let you guys take it from here. Anyone have any questions?
I got a couple, Devin. All right. So what kind of turnaround time do you have on the loans?
Sure. So generally when we start our pre-approval process, we'll have a pre-approval from when we have all documents and submit to our underwriter. Generally with a 24-hour time frame, we'll have the pre-approval through underwriting. There are circumstances where we can do a pre-qualification, but we do like to run everything through underwriting since we can turn it around so fast. Once we have a contract, right now we're asking for, once we've gone through the pre-approval process, 30 days or greater to close from when we have contract to close.
Yeah, so we're an attorney state, so I know a lot. So I know you're new to New York and you're in Ohio, but a lot of brokers prepare their own contracts. We don't have that luxury here in New York City, anyway. Upstate New York, they can probably do it, but they still usually get the attorneys involved. So it may take a while before we get the contracts fully executed. So you actually have some more time. If the loan is being processed earlier, we might have it half signed and, we got to get multiple sellers who might be in multiple locations to sign it. But turnaround time from the time you have a file fully submitted to your underwriters till we get a written commitment approving the loan. What type of time frame are we looking at?
Well, yeah, so that's a good question. So once we've gone through that pre-approval process, we've gotten most of our documents up front. So once we've received the contract and going through our first underwrite process with the contract, unless there's something out of the ordinary, normally we're going to have a conditional approval, on that first run, because again, we've had most of their documents. So that gives us a leg up there. Generally, I think most of the loan contingencies I see are, 21 days, but we're certainly well ahead of that in respect to getting everything, getting our approval. And then usually, again, because we've done that pre-approval process up front, there's very little conditions that we'll have, after the underwriter is reviewed with the contract. It's more or less, earnest money confirmation, things like that we just couldn't get, maybe updating a pay stub if it took them, a month and a half to find a property. So again, that upfront pre-approval process can speed us up quite a bit. Does that answer your question, John? I lost John.
Yeah, I think he got thrown out.
Yeah. And I will say, guys, I didn't mention this earlier. Like I told you about my experience. I've been in the business for 18 years. Previous to this, I worked for Chase Bank, which does a lot of loans in New York. So I'm definitely familiar with the process in New York. Although that we're, Keller Mortgage is new to New York. I'm certainly very familiar with the process. So hopefully that helps.
I think it almost seems too easy. And things aren't usually that easy with deals. Now, how do you handle like when there's a a problem with the deal or somebody's not a stellar borrower?
I guess really, directly, I guess is the best way to put it. We have a good management team that can escalate things, and I guess the one-off scenarios will always happen. I don't mean to make it sound easy, because obviously this process never is 100% smooth for the most part, but I think, just having the experience, that I have helps me. I try not to have too many problems, of course, and take care of them up front in the process of getting them pre-approved. So we can, I don't like doing pre-approvals, and we don't like doing pre-approvals without having all those documents and going through that pre-approval process. And again, that usually gets a lot of the kinks out, where, we may not, everyone may not get pre-approved up front because of that. But again, the ones that are getting pre-approved, we're well prepared to go into the contract and hopefully have worked out most of the bugs.
Devin, what do you need in order to get a pre-approval? What documents do you need?
Sure. So what we generally look for, you're obviously, every borrower is going to be a little different depending on their employment situation and where their money is coming from. But a standard employed W-2 and borrower, we're going to ask for most recent pay stubs, 2 years of W-2s, 2 months of bank statements. So just really identifying the income, the assets. Of course, we'll have a full credit report. When you get into self-employed borrowers, we're getting the full gamut of their documents. So, we're looking for 2 years tax returns. Through all of this COVID, there's certainly been an extra layer of documents for self-employed borrowers and a lot more scrutiny. That's starting to lift a bit, but Fannie, Freddie still have their general overlays right now. So, we're doing profit and loss statements. That's really the biggest addition that, we'll do up front that we may not need. But yeah, so your standard documents that someone would normally be providing when they have a contract, we're getting those up front at the pre-approval process.
And do you only do the pre-approvals during weekdays, or you can do them on weekends as well?
Oh yeah, we certainly do them on the weekends. We have underwriters that work different shifts and work through the weekend. So if we submit something on a Friday, there's a good chance that pre-approval is going to be taken care of over that weekend. So we could get it quickly and they can start making offers. For me, my general schedule is Monday through Friday, but available on through email and such. So we keep a close eye on it. So again, if something comes up as an emergency over the weekend, that we can normally take care of it.
So you said you worked for Chase, so you're familiar with the New York market. How do they view things like sellers concessions and things like that?
Yeah. I mean, certainly in respect to just how we approve it.
Yeah. Yeah.
I mean, as long as it's within the guidelines of the loan, that's certainly something that can be done. Right now there isn't a whole lot of sellers in this kind of market, where sellers are giving credits, but if it's there in the contract, we're certainly going to allow. The conventional loans will allow, depending on the down payment, 3 to 6% in concessions that a seller can do. So as long as it's fitting within our loan guidelines, that's certainly something that's welcomed.
Okay, thank you.
Yes, sir.
Hi, Devin. For some reason, I lost you before. I'm sure you answered my question, but I didn't hear it. So so when you're using the bank guidelines, are you using just Freddie and Fannie and those type of guidelines? Or are you using specific lenders, or is there specialty programs on certain products that you might have different guidelines for? There's some products that are out that have grants and things like that. Do you have that available also? And
Right.
What about commercial products?
Yeah, very good question. So commercial, right now we are not doing commercial. They've asked, what kind of products can we add? And that's been brought up often, but right now we're not. We do follow Fannie Freddie guidelines. We don't have overlay. Like Chase has a lot of overlay, just, since I'm familiar with them, they'll have their bank overlays where we don't necessarily have overlay. We have like our conventional products, we run directly through Fannie. So we're basing 100% off of Fannie guidelines. Now jumbo, we're going to follow, the investors that we have, they have their own guidelines for jumbo, of course, but most conventional loans we can run straight through Fannie. So it breaks down a lot of the overlays that you'll see that may be specific to a certain bank. That's a good question. That is a huge benefit here.
Keller's not holding any paper on any of these products, right?
No, we're a broker, so we do sell the note. So they'll usually make their first payment to us, and then it's sold off to the servicer. On our website, they can make their payment though. So when they close the loan, they'll have information to make their first payment in their closing documents, and they can go right on to kellermortgage.com and make a payment if they like. So they can still do the electronic payment while they're in transition. And then of course they would get their servicing letter and their welcome letter from their new servicer.
What about no doc products or limited doc with big down payments?
Do not have any of those right now. It's your standard, Fannie Freddie conventional, full document loans. We'll see appraisal waivers that we can get right through Fannie or Freddie.
You do co-ops also?
Right now we are working on getting co-ops. Right now that is the only loan, or I guess product or property type that we're not doing. And I think they're working on getting that up to speed now that we are finally licensed in New York. So I would venture to say we'll probably see that in the near future. That's a great point, John. I'm glad you brought that up.
What kind of sources do you have for first-time buyers that have limited credit, where they might have either not a lot of established credit or they don't have a great credit score? Is it strictly FHA that you're doing with that?
So, we have Fannie and Freddie, like their Home Possible, that we have a 3% conventional first product that we can use on conventional. Most of the time you're going to need, a fair score. I'd say usually, I think depending on the circumstances, maybe 680 or above, but is most of the time where those make the most sense comparing to FHA. We do, if there are an area where USDA is available, we do offer USDA, of course. But yeah, we're generally looking at FHA with a 3.5% and our 3% conventional program. Our minimum credit score right now is 620 is where we'll work down to. That just was lower. We were increased for COVID, but we've since brought that back to 620 now. So we're back to our standard.
Do you have any means to increase the credit score, where you analyze maybe somebody's credit and advise them, and then so that they can get their score up, so that then they qualify for a loan?
Sure. Just my experience going over their credit, I'm certainly not a credit expert in the sense of telling them, hey, pay this off and your score will go up, 12 points. Obviously, I can direct them. There's a lot of resources through HUD and things like that. There's a few websites that I keep on file that I would refer someone like that to if they were a situation where they had specific questions. But, again, just with my experience, I certainly go over a credit report with someone when they have that marginal credit to say, hey, this is what I'm seeing, and make sure that they get a credit report in front of them and make sure nothing's erroneous and, going through the basics. But normally I'll refer them to, a credit counseling, or the, HUD.gov has some resources that you can go through, to get more specific information, because there are some resources out there where you can, have someone that'll tell you, hey, I'm looking at your credit. If you pay this off and, take care of this collection, your score is going to go up X points. And, now with all the technology out there, there's a lot of resources at their fingertips that they can get a lot of that stuff through, Credit Karma and all of those. So.
Right. Now, I know you said that you order the appraisal right away, which I think is great, because a lot of banks wait until after the process is done, and then they order the appraisal, and then the appraisal has an issue. So if you order the appraisal and it comes in low right away, do you have any way of appealing it, or do you have sources where you can maybe bring it to another lender and get a second appraisal done?
No, we don't have, like, in, obviously extenuating circumstances, if something were egregiously wrong with the appraisal, there's a process where our management could approve, another appraisal, but that's a very one-off. We have an appraisal coordinator that manages our appraisals. So, that keeps them, flowing fast and giving us updates on, when the ETA is and when they're arrived. And that's who's sending out our notifications to you as the agent once we receive them. So if an appraisal comes in low, or there's a problem with the property, not being an as-is property that's subject to completion, then, I'm notified immediately. I'll then reach out to you as the agent and the borrower just to go over and say, hey, this is what we have. So, we can get that addressed quickly. We certainly can do a reconsideration of value. So if, you get the appraisal in your hand and you're seeing that the comps are just completely off, and you have 3 comps that are much better, then, you could certainly send that to me. I would push that up to our appraisal team, and then they would work with the appraisal management company to submit that for the reconsideration of value. So
yeah, with this whole COVID, Devin, the market values have fluctuated so much, and certain properties have been inundated with multiple offers. And then we've had issues with appraisals anyway. So we could say, the bank is saying, well, the value's here. And I'm saying, well, we got 8 offers over that amount. So how can you, and we work for the seller, how can you justify that this is the value when we have all these buyers willing to pay more money for it?
Yeah, I mean, an appraisal, I understand where you're coming from, but just, the way that appraisal works, of course, is what, not necessarily
Based
what's
on
going to
comps,
sell,
I
but
know.
what's already sold.
Yes.
So it does drive really by the comps that have already sold.
National conference call right now. I can't talk to you right now.
We'll get there. Sorry.
Calling back.
Yeah. So again, yeah, with people that are lining up to buy them, it's great, but it has been an issue, obviously, with the way that this market is right now, with having people that are buying over asking price and things of that nature. It's certainly something we need to address from time to time, but we work through it like anything else, and again, assess the information, make sure it's correct, and working between you and I to make sure that we have correct info, that having you look at the appraisal, make sure the comps are there, and that appraiser didn't miss someone, or miss something. They're human, so there are times where they didn't get it right. So it's always good to put a second eye on it.
And the last question I have, so you said the client would get $1,000 back as a credit, right?
Right. So as long as their loan amount's $150,000 or more, they'll have a $1,000 credit coming back to them that goes towards third-party costs, such as attorney, appraisal, title. So if they're just
Okay, so they don't actually get a check. They get another one of their expenses paid for out of the loan.
correct, no check coming
What you pay for.
a line item on the CD that would say 0+ credit, $1,000. So if they were normally bringing $102,000 to closing, with that credit they're bringing 101. So they may not be getting a check, but they're keeping that $1,000 in their pocket.
Okay, they're getting the credit, and that has to be $150,000 loan or higher.
150 or greater for the.
$125,000. Do they get some credit?
Well, they're not paying the lender fees at that point. So normally we charge $1,500 as a processing and an underwriting fee. So no matter what loan size they're doing with us, they'll get that waiver of the lender cost. So that's a standard. Again, as long as they're referred in by a KW agent. Now on a purchase, if it's a for sale by owner or something like that, and you've referred a friend over or something, that would not get the credits. That's probably one of the one-offs that we have. So a KW agent does need to be involved as a listing agent or a buyer's agent in the contract for them to receive the 0+ offer.
Okay.
So just, that again, one-offs, but that does come up from time to time. You made me think something just with the loan size. Our minimum loan size is 65,000 right now. So if you're doing, smaller loans out there, just keep that in mind. We do not originate anything under 65,000 right now.
What happens if the Keller agent was the purchaser? Would they still get the $1,000 if they weren't getting a commission out of it?
Yeah, so if you're buying a home as a KW agent, you will always get the offer. If you're, refinancing or buying a home, yeah, if you're the borrower, you're going to get the credit regardless.
Okay.
So, and any friends, family, neighbors that you refer over for a refinance, they will also get that offer. Right now, through the next few days, through the 20th, we do have a rate special right now that we're doing on primary home refinances. So our rate is a bit reduced right now, probably about 0.25% from just standard rates. It's been going on for about a month, so it does end on the 20th. So if someone were to lock a refinance with us on a primary home, the rate's going to be slightly better right now through the 20th.
What are the current rates on a 30-year and a 15-year fixed?
Sure. I'd say, 30-year, we're in the low threes. I think most of the locks I'm doing right now is between 3 and 3.25 on 30-year. And I'd say in between like 2.5 and 2.75 on 15-year on purchase. And then again, right now with that refi discount, that's about where we are with refi, because normally refi is slightly higher. So, you can kind of capture that little lower rate here for the next few days. But normally I'd say a refinance is an 1/8 to 1/4% higher than purchase rates.
All right. I just wanted to thank you, Devin. I know I asked a lot of questions, but I tried to ask questions that I thought the agents would want to know, because they're going to wind up asking us. And I figure it's better that you answer them.
Better to come from the horse's mouth.
We're
I
excited
appreciate it.
It's finally in New York. It's been a few years, and the rest of the country has gotten the benefit of it. We were always a little bit behind. We have legislators that make life difficult. So, but we're glad that you're here and that our clients are going to wind up benefiting from using your services. So
Absolutely. And I'll tell you, just I mentioned earlier about us connecting. You can go on, if you're familiar with the portal, you can hop on the portal and explore, some of the stuff we have. You can connect. You can go on and select me as your loan officer. And again, going forward, anytime you send someone over, it's coming to me. So you have one person to communicate with. If you don't select me as your preferred loan officer, it'll go into a pool of, right now, there's about 7 loan officers here at Keller Mortgage that are licensed in New York. I'm sure that's going to grow, but just so you can kind of know the experience here, it does make it nice to where you have one person to talk to if you have 2 or 3 deals, so you're not trying to reach out to 3 different loan officers trying to figure out what's going on.
May I ask a question? Hey, can you hear me?
Yes, sir.
Hey, so do you guys have an office in New York, or it's just all virtual?
Good question. Yeah, it is all virtual. We have, one building here in Dublin, Ohio. So we have, loan officers spread out over the country. There is a group of us that work in the office here in Dublin, but most of us do work remote. And, again, with the virtual experience of the portal and such, that's really how we're able to pass on the savings. We don't have a lot of overhead, so we can pass that on to the client with all of these discounts that we offer.
Devin?
Right. And how do you find the appraisals to view the property? Like, is there like is the appraisal working with Keller Mortgage, or is they just like another outsource you guys use to appraise the value of the home?
Sure, good question. So we work through an appraisal management company. So here at Keller, we have an appraisal team that as soon as we do a loan application, it gets triggered out to them. They're ordering the appraisal through the AMC, the appraisal management company, and then they have a network of appraisers based on where you are, in the state and all over the country for that matter. So it's a pretty, regimented process with all the regulations. I'm not able to communicate with the appraiser, of course, and so that's the AMC is just that middle person between the appraiser and us as the lender.
Devin?
So if I knew an appraiser who wants to be in the network, how would they get in?
Say that again, Errol.
I said if I knew an appraiser who wanted to be in the Keller Mortgage network, how would they go about doing that?
It would be through the appraisal management company. That's a good question. I could reach out to our appraisal team and see if there's a process that they could connect through the AMC. There's a couple that we use. I think we have a primary company that we use. That may vary now that we're in New York. And then we have a couple backups if we find that, they're not able to meet a certain date or something like that. So I could certainly follow up and try to get you a better answer for that.
Okay.
Devin, I have one quick question.
I'm sorry, what was that?
I have one quick question. Are your underwriters in-house?
Yes, sir. That's a good question. They are. So we have a whole underwriting team here that's Keller Mortgage employees, all of our processing team. So yeah, nothing is outsourced. It's all under the Keller Mortgage umbrella.
Okay, so your underwriter sees a glitch, you could talk to them directly. Is that correct?
Oh, absolutely. Yeah. We
Okay.
have, we're always instant messaging with them and talking on the phone with them. So yeah, absolutely.
Sure. Okay. Thank you very much.
Sure. You guys have great questions.
Where do we get the flyer, Devin? Where can I get that flyer?
I'll email it out to you, and then you can, if you'd like to distribute it out to everybody.
Thank you.
Yeah, I'll email that right after the call.
One last thing, Devin, since I know you're by Columbus, Ohio, are the rates higher if you're an Alabama fan instead of an Ohio State fan?
We won't talk about that. As long as you're not from that upstate up north. That's great.
Anybody else have a question? Okay, Devin, we'd like to thank you so much for all your information. We got your phone number, we got all your contact info, and I think it's going to be really great.
Absolutely. Well, don't hesitate to reach out on any one-offs, and you have a certain client that has certain questions, feel free to reach out, and I certainly look forward to working with everyone.
Thanks, Devin.
Thank you.
Thank you.
Thank you, Devin.
Absolutely. Yep. Have a great day, guys.
Have a great day.
Mhm.